Hello and welcome to another video for the Closed-End Fund Mastery Super Screener and Interactive Report. In this particular video, we are going to go over the Closed-End Fund Mastery's distribution success rate. So in this video, we are going to focus on goal number 1 of Closed-End Fund Mastery's 3 main goals. Goal number 1 being distribution sustainability. I thought when I created Closed-End Fund Mastery that its claim to fame would be successfully avoiding the majority of distribution cuts, thereby providing users with a reliable income in good and bad times. I'm beginning to think that there is more to this than I anticipated. I created Closed-End Fund Mastery in the aftermath of the market crash of March 2020. And in Closed-End Fund Mastery's short existence, it has already been battle-tested with the fallout of the crash of 2020 and a bear market which began its descent at the beginning of January 2022. As a means of measuring Closed-End Fund Mastery's success, I created the Closed-End Fund Mastery Distribution Report Card. If you would like to receive this weekly report card, it's included in my free weekly distribution newsletter. The link is in the description below. For those of you not familiar with Closed-End Fund Mastery and its objective, Closed-End Fund Mastery focuses only on the highest yielding closed-end funds trading today. Currently, we track 326 closed-end funds. The mission of Closed-End Fund Mastery is to remove some of the uncertainty regarding a high-yield closed-end fund's ability to maintain its distribution. The purpose of this report card is to show you how well it has done its job. I'm going to quickly walk you through this report card to show you how well Closed-End Fund Mastery has performed since inception. But after that, and I think of particular use to my current subscribers, I'm going to break down Closed-End Fund Mastery's distribution performance by year, and I think the results will surprise you. I know they did me. In the first column, we have the performance of all closed-end funds since the inception of Closed-End Fund Mastery Super Screener. You can see that of the 326 closed-end funds we cover, there has been a total of 1,105 distribution changes. That includes increases and decreases. Below that, you have the total number of distribution increases, which is 468, and the total number of distribution decreases of 637. Now, as I mentioned earlier, since we recently had the market crash in 2020, and we have gone down in the market since the beginning of this year, it is no surprise that there are more decreases than there are increases. And the net number of distributions comes out to a negative 169, meaning there were 169 more decreases than increases. In the following column, you have the distribution performance of closed-end funds that were not Closed-End Fund Mastery qualifying funds. And you can see that of the 1,105 distribution changes, 1,005 were attributed to those funds, with 402 increases and 603 decreases, for a net number of distribution changes of negative 201. The column after that are our Closed-End Fund Mastery qualifying funds. And of the 1,105 closed-end fund distribution changes, only 100 of those were attributed to Closed-End Fund Mastery qualifying funds, with a number of increases of 66 and a number of decreases of 34, which left you a net number of distributions of positive 32. So right off the bat, the most glaring difference between non-CEF Mastery qualifying funds and CEF Mastery qualifying funds is that CEF Mastery qualifying funds are net positive in the total number of distribution changes since inception. Now let's see how that difference equates on a dollar level. For all 326 closed-end funds, there was a total of $61.08 in distribution increases. Now, this number is the distribution change amount multiplied by the number of distributions per year totaled for the 326 funds. And this is the total number of dollar distribution decreases, leaving a net for the 326 closed-end funds loss of $17.82. And if you look at the funds that are not CEF Mastery qualified, the bulk of closed-end funds that were not CEF Mastery qualifying funds were responsible for the bulk of the increases, but they were also the bulk of the decreases, leaving you with a net loss of negative $26.94. And even though the closed-end fund mastery qualifying funds did not come close to the dollar totals for the non-qualifying funds, you can see that closed-end fund mastery is currently net positive for net distributions in the amount of $36.07. Now, that doesn't seem like a significant number. However, and I always pose this to my subscribers, imagine that you had the non-qualifying and qualifying CEF Mastery funds in their own separate index fund, and you owned 100 shares of that fund. Then you begin to see that those numbers add up significantly. In the case of owning 100 shares of each index fund, you would have seen an income loss of $2,694.43. As opposed to closed-end fund mastery qualifying funds, you would have realized a distribution increase to the tune of $912.93 for a difference of $3,607.36. If this is money you plan on living off of when you retire, chances are you're going to own a lot more shares than 100. So let's just say, hypothetically, you own 500 shares or 1,000 shares. With a loss of $26,944.30, chances are you might have to put off retirement for a few more months. Maybe. Now, what I'm about to show you blew my mind. I mentioned earlier that I thought closed-end fund mastery's claim to fame would be its ability to avoid a significant amount of distribution cuts. And I also mentioned that I was starting to rethink that. Up until recently, my closed-end fund mastery distribution report card focused primarily on distribution cuts. I always had the distribution increase data available to me, but it was a statistic that I considered that I would eventually get around to because I did not think it was going to be that big of a deal in relation to the amount of increases of CEF Mastery qualifying funds in relation to the total distribution increases of 326 closed-end funds. And now that I have gotten around to that statistic, I regret waiting this long. What you are looking at are the annual totals of distribution increases minus distribution decreases on an annual basis. So the column to the right of that is our hypothetical 100 shares in our hypothetical index funds. And you can see that to date, over the last 3 years, we have a grand total of a negative $17.82 distribution increases minus distribution decreases for a total of $1,782.10 in the red for our hypothetical index funds. Now, I don't think anybody would be surprised if I were to tell them that in the year 2020, after the market crash, that the year ended with a negative distribution total of $14.83. However, if we dig a little deeper into that number, here we have the non-qualifying closed-end fund mastery funds with a net increase to decrease distribution rate of negative $15.13. And the true are closed-end fund mastery qualifying funds. And it actually ended the year with a net positive of 30 cents, or a total of $30.16 in our hypothetical index fund. If we jump forward to the current year of 2022, I do not think anybody would be surprised that the net negative to increased distribution is negative $3.10. But again, if you dig further down into those numbers, you can see that non-qualifying closed-end fund mastery funds have a net increase to decrease of negative $4.59, while closed-end fund mastery qualifying funds has a positive of $1.49. I saved the best part for last. In the year 2021, with dividends reinvested, you can see all the major indexes had returns in excess of 20%. During that time, the net increase to decrease distribution rate equated to a net gain of only 11 cents. But when you dig a little deeper, you can see that non-closed-end fund mastery funds had a net distribution loss of $7.23, or the equivalent of negative $723.08 in our hypothetical index fund. But also the mirror opposite when you look at the net increase to decrease with closed-end fund mastery funds, which had a positive $7.34, or $733.73 in our hypothetical index fund. I'm surprisingly dumbfounded that in a year when all the major indexes have exceeded returns of 20% for the year, there are actually more distribution cuts in non-qualifying closed-end funds than there are for the closed-end fund mastery qualifying funds. Having said all of that, and aside from all of that, the most important point I want to make about this graphic is that despite a market crash in 2020 and a bear market in 2022, and even a rally in 2021, closed-end fund mastery qualifying funds have consistently outperformed. Well, that's it for this video. I hope you enjoyed it. I hope you got some valuable information from it. If you would like to see more videos, click subscribe to my YouTube channel. If you would like to receive my weekly distribution change report, the link is in the description below. If you would like to subscribe to Closed-End Fund Mastery, the link is also in the description below. If you subscribe, you can have 1 free month of free reports with no obligation. There are also links to other videos in the description below. Thanks again for watching.